What's up, everybody? Welcome to the Stocks channel. My name is Cory, and this week in the stock market, we had a strong bounce of very critical weekly support. And today I want to look at weekly charts of all of the major indices. So first up, let's take a look at a weekly chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. First things first, I did do a tutorial on exactly how to set up your TrendSpider charts to look just like mine, including the technical indicators we're going to look at. And right now, TrendSpider is currently running their Labor Day sale, where all you need to do is click on the link below in the description, join a 7-day free trial, and then you can get up to 60% off the plans. So if you've been wanting to try TrendSpider or want to set up your charts to look just like these and do the same technical analysis I'm going to do today, now is the best time to take advantage of that discount. All right, so this week we did get a very positive bullish bounce from that critical support zone, which was just above 430. And based on my technical analysis of the weekly chart, I did say I don't expect to see SPY breaking 430. We'll hold that level as support and then start trending higher towards SPY 480. Now, on top of that, I said there was a chance we could bounce to 450 and then get rejected and still hit 430 and then satisfy the correction before we're moving to 480. But now that we're getting a very impulsive bounce and breaking through 450, that is looking more and more unlikely the longer SPY holds above that resistance. So remember, if SPY was going to 450 and getting rejected to 430, we need to see it in the price action. So don't ever assume an idea has to happen. I am not guaranteeing SPY has to get to 430. That was the lowest price I thought we would see before we continued higher. That means we could already have seen the bottom of this pullback, and we're starting back higher towards the previous all-time high. Now, for that reason, I'm going to make one simple adjustment to my chart, and I'm simply going to move the weekly trend line to now have the support off the previous bounce. That way, if price action comes back to that support trend line and breaks below it, then I'll be more confident on the weekly chart SPY is going down to 430. This is just a very simple tool to let price action do all the talking, and I know if that support trend line is broken, we're likely going to the next support trend line lower, which is going to be the one at 430. Again, there's no magic here. We're letting the price action do all the talking, and that is why I'm simply looking at a chart of price action. We'll throw on the technical indicators here in a minute, but it's important to let the price action do all the talking, which means we want to look at the price action alone without any other bias, and then see if the technical indicators align with what we're seeing or possibly tell us a different story. So right now, we are getting the bullish price action of a higher low bounce on the weekly chart, and then we simply need to come up here and break this resistance at 457, and we should be well on our way to 480 with little to no resistance from 460 to 480. That is what I call a blue skies rally, because once you break resistance and there's no other resistance above that, you get those very impulsive bull rallies, and that is exactly what I'm seeing in SPY if we can break this weekly high. So keep in mind, we are going into a weekly high with a weekly higher low, and bull trends are higher lows and higher highs. So objectively, this is still a bull trend, and I still stand behind what I said before. There is no debate that this is a bull trend. If you don't think this is a bull trend, I simply think you're wrong, because there's nothing on this chart that allows for a bear trend just yet. And last time I said that if you want to convince me otherwise, you need to call all of your friends and get SPY down below 430. And as you can tell from the chart, that did not happen. So this is still a bull trend objectively, and we're getting confirmation that we're continuing higher when we break that resistance above, because we now have the higher low pivot. Now, if at any point we pivot from this high and we continue lower and break the support trend line, then I'm looking for 430, and I still think 430 would be the end of that pullback in correction before we continued higher. The only way I'm getting bearish, and the only way I'm assuming this bull trend is over with, is if SPY starts getting weekly closes below 430. I'm not asking for you to agree with me. I am giving you my objective price action reasoning, and I am not going to call this anything other than a bull trend until SPY breaks below 430, and then I will start jumping on the bandwagon that we're possibly back into a bear trend. I don't care about noise and fundamentals. I follow the chart, and if we're fundamentally bearish, the chart needs to show it, because I can only trade price on the chart, and that is what pays me. I'm not interested in your narratives, and I'm not interested in why you think we're supposed to be in a bear market, because I'm not trading your ideas, I'm trading the chart. It is that simple that as a trader, I have to act on what I see on the chart and not some ideas or some fundamental bearish reasons. So it goes without saying this is still a bull trend, and we'll throw on the technical indicators next and see if we can get any more information from those. All right, so the technical indicators are now on the chart, and we're still looking at the weekly chart of SPY. And just a reminder, I did a tutorial on exactly how to set up your charts to look just like this. So the first thing I want to pay attention to is the price action did get that positive bounce off the rising 20 weekly moving average, and I told you the crossover in the MACD on the weekly chart was not relevant while price was above the rising 20 weekly moving average, because price action is king and price action has to break below that support before we can say we have negative momentum from the MACD. It's completely normal to see a little MACD crossover during a pullback and then go right back into positive territory on the bounce. And so far, it looks very likely that that's going to be the scenario. So again, price action confirms that we still have all of the positive momentum. RSI on the weekly chart is still above 50 and starting to rise. The MACD had a temporary crossover, but still above zero. And it looks like it could easily cross back over to the positive direction. And we still have positive momentum from our Bollinger Band Squeeze indicator. So based on everything we see on the price action and all of our technical indicators, there is nothing on this chart that says we have to go lower. It is only going to be that break of support at SPY 430 on the weekly chart that tells us we're losing bullish momentum and we're likely heading to lower prices. So last week I said if you're going to take on risk in a bull trend, the weekly 20 period moving average was one of the best opportunities to do so. And you can clearly see with this week's bullish price action that that was the correct call, and it was a very little risk trade. So if you did not take that trade within a bull trend, you seriously need to go back to the drawing board and ask yourself why you did not take that great low risk, high reward entry. Low risk and high reward is the best trading you could possibly do, and on a weekly chart, they are going to be very few and far between. As you can see from the last time we were around the 20 weekly moving average, we had multiple months go by before we had another low risk entry. So you really need to make sure you're not missing those opportunities because they are few and far between. Next up, we'll look at a weekly chart of the NASDAQ 100 triple Qs, and we could see the same exact story as SPY. We had the pullback into the rising weekly 20 period moving average, and now we're getting a very strong bounce from that support. The weekly RSI is still well above 50 and continuing to rise. The MACD had the bearish crossover, but we were still above zero and we still had price action above the rising weekly 20 period moving average. So there was no action to take from that crossover unless we lost critical support at the support level. And on the weekly Bollinger Band Squeeze, we still have positive momentum, and that means we can still continue to push higher. So a lot of this continues to come back to the fact that we are obviously in a bull trend, obviously in a bull market, and the stocks obviously want to continue pushing higher as long as we can hold above critical support. This is a very obvious risk reward setup from critical support, so hopefully you were able to enter at that level, and now you have a very low risk trade because you're well within profit. Remember, anytime you're swing trading, you want to stay in the direction of the trend, which means you want to stay long as we have a bull trend, but it is okay to lock profits along the way as we reach resistance levels. All right, then jumping over to the Dow Jones weekly chart. First, I want to start by looking at the price action because the Dow Jones had this unique inverse head and shoulders breakout, and I told you the neckline was right there at 342 on weekly closes, and as long as we continue to close above the neckline, we were likely getting a very low risk entry that would take the Dow all the way back to 370. So you can see we had the pullback into the neckline of support. We broke below it temporarily, but had the weekly close back above it. And then we had a very impulsive bounce from that neckline all the way back up to the resistance at 350. So again, this is only confirming what we've already been seeing, which is that we were retesting the breakout of the inverse head and shoulders. We hit the neckline of support, and now we're getting the positive bounce, which is only giving more bullish confirmation. If the Dow Jones can break the resistance at 350 and 354, then we're well on our way to the price target at 370, which is a blue skies breakout because there will be no resistance above 355. So again, everything is continuing to confirm what we already saw, and that is the definition of letting price action do all the talking. If the price action closed below the neckline, then we knew it was a false breakout, but now we're getting confirmation of the bounce, which tells us it's the real deal, and the buyers are still motivated to buy at critical support because they know stocks are going higher. That confidence in buying the dip is what allows bull markets to continue to run, and until we see some different behavior in the price action, we're going to remain bullish. So then to quickly throw on the technical indicators in the Dow Jones, you can see the RSI came down towards 50 and now it's bouncing, so we still have bullish momentum. The MACD is still above zero and still with a positive histogram, and we still have the Bollinger Band squeezing, which means when all of this energy is released to the upside, we're likely going to run for another 7 to 8 weeks. So I continue to warn you, if you're bearish, you are going against all objective odds because everything on these charts are still telling us to be bullish and that we're still going to continue higher. Then jumping over to the Russell 2000 IWM ETF weekly chart, again, we see a very bullish bounce off of a rising 20 period moving average, which I told you was a very low risk entry. And I'm actually giving more odds that the small caps could go on a very impressive bull rally here. The reason I think the small caps are set up to run is because they have gone absolutely nowhere all year long and been building up this energy, which is evident by the Bollinger Band squeeze on the weekly chart, which is now releasing energy to the upward direction. We have the MACD above zero with positive momentum, and the RSI on the weekly chart just bounced above 50 and starting to rise. So in IWM, when we break that resistance at 197, we are very likely running all the way into the 220s, and I think it's going to happen very quickly. When something consolidates for this long and goes absolutely nowhere for over 1 full year, when you finally get the breakout of this range, it is going to be very impulsive. So with all this bullish momentum, the only confirmation of the catalyst we need is that price action breakout above 197. So if you didn't take the low risk entry at 183, then you can just wait for the break of 197. It doesn't matter as long as you're managing your risk. And on the break above 197, that will become your risk level. So I'm still bullish on IWM and I'm still bullish on the small caps as a whole. But if you want to wait for the bullish catalyst, wait for that price action break of 197. And then if we break down below the support at 183, you need to get risk off because that's the bearish breakdown. And if we break down to the bearish direction, that is obviously going to send us to much lower prices. But with the price action above a rising 20 period moving average on the weekly chart and all of the weekly bullish momentum, the odds still favor that we're going to push higher and hit those price targets in the 200s. So jumping back over to the S&P 500, we just went through all of the major indices on the weekly charts, and we still see weekly bull trends across the board with no major warning signs that the bull trends are ending anytime soon. All of that can change, and that is why we look at the charts each and every day and each and every week. And each and every day and each and every week, when we look at the charts, we continue to get confirmation from the price action that we are still in this bull market and still in a powerful bull trend. If you're still bearish and still waiting for a market crash, do so at your own risk because there is nothing on these charts that tell us we need to go lower until price action proves us incorrect and tells us we are going lower by breaking critical support. Remember, the only way you're ever going to be a profitable trader is by being objective because you cannot go against the chart because the chart is always right. And if you're not stacking your odds in your favor, you are not going to win enough trades to stay profitable. In a bull trend, it is much easier to take long trades from support, and that is what we have been doing all year long and absolutely crushing this market. It doesn't mean you can't short, it just means your short should be very short-lived because the direction of the trend is higher. If you're shorting at resistance, you need to have a very tight stop loss because when we break those resistance levels, we're going to continue to climb higher towards the next leg higher. The next leg higher in this bull trend will be retesting those previous all-time highs, and we are getting very close to the breakout levels. So stay objective and let the price action do all of the talking, and make sure you're managing your risk around the critical levels that I give you each and every day and each and every week. And as long as you are managing your risk, you are going to remain profitable because your winners will be larger than your losers. And if you're trading with the direction of the trend, you are going to win more than you lose. So get in the habit of this disciplined approach and you will never look back. Trading price action is truly the best way to stay profitable. So don't forget to take advantage of the Trend Spider Labor Day deal. All you need to do is click on the link below and sign up for the 7-day free trial, and then you will be eligible for up to 60% off the plans. If you want to come crush this market, consider joining Bank Trade Alerts or the Stocks Channel Discord server, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.